Hi, it's me again on YouTube. My name is Yong Wei Jing, metric number 261482. I am from Public Speaking Skill Group X, and today I would like to talk about why we should invest in the stock market instead of keeping saving in a fixed deposit. As a child, I actually thought that for the longest time, the money that I plant in my garden was going to grow cash for me in the future. Although adults have rightfully broken the argument. Who does not want to see the growth of their money? If you invest appropriately, making the accurate decision, and beware of the associated risks, the stock market can be the correct platform for a money plant. The concept behind how the stock market functions is actually pretty easy. The stock market working much like an auction house, helping buyer and seller to bargain the price and make trade. I have come across numerous of Malaysian people who are clueless about how to start investing and the benefit of investing in the stock market in Malaysia. So, they choose to save their money in the fixed deposit. According to Stashaway Malaysia Country Manager Wong Kai-wen, he have mentioned that only less than 5% of young retail investors under the age of 35 are investing in Bursa Malaysia. Actually, it is not hard to enter the financial world. A foundation of a finance trading industry requires a basic investment awareness, such as buy low and sell high. If you are probably wondering how to trade stock in Malaysia and you are new to trading, trust me, it is not hard to understand the process of itself, and all you need is just a trading account with a stockbroker. Before beginning your journey to invest in the stock, let me explain to you why we should invest in the stock market instead of saving in the fixed deposit. We invest in the stock market is because we can gain a higher dividend income, and we can get capital gain from the stock market, and it is one of the best ways to stay ahead of inflation. Let me start with we can gain higher dividend income from buying stocks. Based on an article written by Sean Rose, dividend paying stocks are very popular with investors because they provide a regular, steady stream of income, and companies that experience big cash flow and do not need to reinvest their money are the ones that normally pay out the dividend to their investor. Besides that, as stated in the Star newspaper written by Oi Koi Hua, he is the managing partner of MRR Consulting. He dealing mainly with business evaluation, investment, and financial trading. He said that there are many stocks offering dividend yield in excess of existing fixed deposit average of about 2% to 2.5% relative to the current high stocks price in Bursa Malaysia. The average dividend yield for all stocks in Bursa Malaysia is about 3.5%, which is 2.5% higher than the existing 12-month fixed deposit rate. Let me give an example of research by Oi Kai Hua. He found that in the year 2009, the dividend yield for Hepta company is 10%, and the latest dividend yield for this year is 13.75%. The fluctuation of the dividend yields for between 2009 to 2020 is around 6% to 14%. So it is considered stable for most of the investors to get the dividend. Most of the people without the knowledge of investing will choose to put their money into the fixed deposit. This includes me, myself. Before I have started learning and making research about how to invest in stocks, I only think that the way to increase my saving is to put my saving into the fixed deposit and get the dividend from it. Based on my personal experience, after I have learned and made the research on how to investing in the stocks, I realized that the dividend yield by fixed deposits is actually lower than investing in the stocks. Besides that, the dividend rate for fixed deposit will be affected by the period of saving. The shorter time you put in the fixed deposit, the lower the dividend you will get. On the other hand, if we invest in the stock market and the rate of the dividend is higher compared to the fixed deposit, and it will not affected by the period of holding the stocks. Even if you buy that stocks a week, even a day before the stocks issuance the interest, you will still get the dividend by the rate stated by the company. Furthermore, the second reason we should buy stocks is we can get capital gains from investing in stocks. Capital gain is an increase in the price of the capital asset. When you sell the asset, it is considered to be realized. A capital gain could be in short term, which is invest in only 1 year or lesser, or in long term, which is more than 1 year. While capital gain are generally synonymous with stocks and funds due to their inherent price fluctuations, any security sold at a price greater than the selling price paid for the stocks may have capital gain. For Malaysia, we do not have any tax on the profit from capital gain, so this makes us earn more from that. While buying the stocks, we actually hope that the company value will be increased and generating a capital gains when we buy the share and sold at a higher price to someone else. A speculative practice known as short-term trading is trying to get like low and sell in the high profit over the short time period. Company expect to expand over time are known as stock of growth. You may be wondering how much we can earn from capital gain. Here I will explain the stock price using a graph from Nestle Malaysia Berhad. Nestle Malaysia Berhad is a Malaysia-based nutrition, health and wellness company. The share price of Nestle at the year 2010 was around RM33, and the price for 2020 is RM141. This share rose around 400% over the past 10 years. The chart is from Yahoo interactive stock chart that I have shown here. So for the long-term investment example, if you invest 10,000 in Nestle Malaysia in 2010, and you will get 40,000 back in years 2020 by holding Nestle stock for 10 years. After you have seen the example that I have shown, do you think you will still willing to put your saving into the fixed deposit? No, right? In my personal experience, capital gain are categorized as short-term gain or long-term gain. When your investment has been kept for less than a year, short-term gains occur. For more safety and low risk, I have suggest like you better to invest long-term investment and choose the blue chip stock that you trusted. One of the reasons why wealthy investors enjoy blue chip stocks so much is because blue chip stocks are stability and have a lot of strengths of the financial statement, and they tends to increase decade after decade at the reasonable returns rate. Usually their return rates are around 8 to 12%. Historically, we'll reinvest in the dividend. Many a little makes a makers. The reason why we should make investment in the stock is because it will bring you compounding returns. The amount of the money in the increase over period of the time. At the moment of retirement, daily investment made from an early age will be receive a significant benefit. In addition, the third reason to invest in stock market is because it is one of the best way to stay ahead from inflation. Historically, stocks have averaged an annualized returns of 10%. It is higher than the average of annualized inflation rates. By transferring the fixed deposit to stocks, they offer a major shield against to future inflation. Stocks provide inflation protection in two major forms. The first is that stocks always pay dividend, and the second is that stocks can raise continuously over time. As companies grow their profit, the dividend can also increase significantly. They will pay more to the investor in the form of dividend in the company earning if the company earn more. In the future, this increasing dividend will lead to a greater cash flow, which might theoretically boost your purchasing power and sustain or even improve your standard life living. Even as the inflation is rising, you no need to scare about it. Capital growth is the second inflation fighting part for the stocks have. In general, the stock's price continue to rise up over time. A few $100 will be saved in the stock market, which will be rise into $500,000 over 20 years. That more money than you have keep your standard of life equal to what you have living in now, even though the inflation has risen in the future. In my humble opinion, although we cannot stop the inflation that happened in our country, but we can try to avoid it by planning. Plan to invest in stock that will pay a dividend and grow instantly is the way better than putting your saving in the fixed deposit. As long as this company can raise the price with inflation and maintain their profit, their stock price should also rise alongside that inflation. Okay, to conclude what I have said in the speech, let me briefly restate why we should invest in the stock market instead of putting your saving in the fixed deposit. The reason why we should invest in stock is we can gain a higher dividend income and capital gain from the stock market, and it is one of the best ways to stay ahead from inflation. Frankly, invest in the stock market is about to learning, having fun, and making cash. But you know what? They are more than just making money. Done right, trading in stock help you with limited work to use the resource that you already have to make more money. After having a long speech, I hope that this speech can give you the idea why we should invest in stock market instead of putting in the fixed deposit. Thank you.